Hey everybody, how we doing? Economic Ninja here. We're going to be talking real estate today. Let's do a couple things here. Just adjust the camera. Sorry about this. It's so unprofessional. We're going to talk real estate. We're going to talk that real estate's starting to come down. I think that's going to be good news for a lot of people. Bad news for some other people. We're going to go to our cardboard notes. It's going to be like cardboard chat time. So what brought this up is I had a client contact me a little while back and said that they had taken some advice I'd given them about looking at their personal portfolio, their portfolio of rentals, and one of the pieces of advice I gave them, because they felt that the market was going to correct, that this market is unsustainable. You can't keep having homes rising in prices, rents rising in prices, along with all these other things, and people be able to keep paying their rents or keep buying homes. It's weird. They almost thought like homes don't always go up. Now, you guys know that that's something that I definitely am a proponent of, teaching or sharing, is that homes don't always go up. Now, a lot of people go, yeah, but over the long term, they do this. Yeah, same as the stock market. That's because your currency is being destroyed. That's a fact. I don't know what to tell you. Every year, more and more currency is made. I don't care what, who's in the presidency. I don't care who's at the Fed. I don't care anything except for the fact that currency keeps getting printed over the long term until that currency just goes to nothing, and then they start over again. And just so you know, when it means goes to nothing, it doesn't mean there's nothing else available. They just print out a new type of currency based on a whole new set of rules or backed by a whole new set of commodities. That's just how it works, okay? There are cycles, okay? And the cool thing is that if you want to make a lot of money, you start trying to identify where those cycles are. Now, I can't state that you can always hit the top and the bottom. I am living proof that that is impossible. But by and large, you can catch those cycles and make a lot of money from them. So my client went ahead and sold one of their rental properties, and what they said was pretty interesting. So one of the things that they stated was that instead of selling in 2 days, which was normal in their neighborhood over the past few months, it took 2 weeks, and their property was a clean property. They said it still sold for over asking price, but it didn't sell for as much over asking price as some other properties did a couple months ago. Now, one of the things that I attribute that to, and I believe they do too, is the rise in mortgage rates over the last few weeks to a couple months. We've seen those prices increase, and yes, you could still get a 2.5% loan today, but the last I checked, it was like 3 points. I'm gonna be honest with you, I am very big on not paying points, all right? The facts are the economic climate is always changing, and we just don't know which way it's gonna go. Why would you put that much money out front to save a couple $100s a month, okay? Unless, paying those points, you know that you're gonna save, you're gonna recoup all that money in savings within a year or less. I am a big proponent on not doing that. Keep your, the money you would have been putting it towards points in the bank, and keep that for a rainy day, for an emergency, or use it to invest in something and hopefully allow that to grow. It's like the richest man in Babylon. Make your money work for you, all right? A lot of people don't understand that. So a couple other things they're saying is that, first off, they're saying thank you, that they sleep a lot better at night. They say regardless of where the market goes, they were able to take the profit from that rental property, dump it on their own home, and now their own home, their personal home, their mortgage, they say, is barely worth even talking about. They said it's so small, they didn't tell me the numbers, but it's a fraction of what it was. And so they're sleeping a lot better at night. And the great thing is they're now exposed on a percentage basis of their wealth, on a smaller percentage basis, to the real estate market, okay? You want to be, when you're an investor in real estate, you want to be exposed using debt to the real estate market when the market is going up. The market goes up for a couple different reasons. One reason is that it's just there's a lot of demand for homes because of a strong economy, okay? We're not there, okay? We're in a panic economy. A strong economy would be that, jobs are growing like crazy, industries growing, but over the last 30, 40 years, we've been shipping our industry, our desires, to other countries and buying their goods and then fulfilling our desires here. That's not a good thing. You know, in the Industrial Revolution, we were producing. We're not a producing nation anymore. Now, I believe that we're going to go through a massive downturn cycle in the economy, and I believe that we're going to be forced to become a producing nation again. And that's something that's really positive about this entire story. You know, the Renaissance came because of the Dark Ages. This is how it always is. You have to go through something horrible to birth something amazing and new, okay? So I want to share that with you because it was really interesting. There are insights that it took longer to sell. It still sold for over asking, but not as much. And they said that they are seeing a lot more price reductions. I'm seeing that as well. Now, price reductions happen for two different reasons. One reason is in a smoking hot market, real estate can get priced right. You'll see real estate agents go, let's shoot for the moon and let's throw it 10%, 20% above what they're selling for right now, because we know that if they're selling for that now and they're going for over asking price, in a couple weeks we'll be hitting our mark. We'll be at that thing. And let's play on the fears of the buyers, quite honestly. If inventory is low, we could take advantage of that. The other reason is because, so I lose my train of thought here, sorry. So mispricing is one. Another, it was mispricing. Or price reductions. The price reductions happen because you shoot the mark, it's too high, and then you got to back off. And the problem is now you've sort of psychologically damaged that listing. The other reason for price reductions is because of a huge influx in inventory. And I believe that that's what you're seeing right now. Right now, you are seeing inventory starting to move upwards. You're seeing a lot of people that are looking at this market going, oh my gosh, I can get this for that house and then move and make that transition. Ironically though, all over the country, these other small suburbs are just exploding in price because you're not the only one thinking that, okay? But also, there's a lot of people that are going to be hitting that forbearance line. They're going, you know what? I haven't paid my mortgage. Either I'm working or I'm not, and I've got equity because of this boom. I'm going to get in, and I'm going to sell my house. Well, the problem is you're going to find out in about the next 90 days that a bunch of real estate's going to hit the market, and you better hope that you just got in at the right time. Now, this isn't financial advice, okay? The problem is people have a very hard time looking just 3 months into the future, like looking at today's data and projecting out 90 days and figuring out what's going to happen, especially a year. Most people can't even think, 90 days, let alone a year. But I believe that's what you're going to see. I think you're going to see just a rapid onset of inventory hitting the market, and we're going to start to see a lot of price reductions. We're going to start seeing that gap widening between days on market. It's going to get wider and wider and wider. And then that's really going to psychologically mess with buyers because they're going to go, okay, what's wrong with this property? What's wrong with that property? Because buyers also aren't looking at 90 days out. They're not looking at interest rates just moved up. They're looking at, oh my gosh, I better buy now because a mortgage is 3.5% and I don't want it to be 4%. All right. Now at the time of this taping, look, it could all change tomorrow as far as interest rates. But the facts of the matter, they're not looking at, hey, the Federal Reserve's sort of in an issue. The repo market is, blowing up. The banks are putting all their reserves into the repo market, and they're going to probably be forced into negative rates. So they're not looking at that. They're like panicking, okay? But so what happens is, as they're looking down at their local area, their local neighborhood that they want to live in, all they care about is, well, why is that house, sitting on the market for a month? What's wrong with it? There's got to be something wrong with it. And the problem is then that even exacerbates the issue. So I hope you guys got something out of this. Good news is I do think we're starting the correction. Corrections are healthy. I don't care about the depth of the correction, to be honest with you. Corrections are healthy. They knock the enthusiasm down a notch. And when you're seeing everybody saying, I got to buy now or I can't afford it in the future, I'll never be able to buy a house, that's poppycock. Hey, there you go. There's the word of the day. I'd rather you hashtag real estate in the comments, but if you want to hashtag poppycock, I think that's what it is, quite frankly. All right, guys, that being said, the economic ninja is out.